Good morning, traders. It is Tuesday, December 2nd, 2014, 8:01 a.m. Chicago time. Thanks for joining me as always. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Following our usual routine, running down the key overnight news. In Europe, continued focus on disinflation as a theme, and it highlights that the European central banks, including the ECB, Riksbank, and the Swiss National Bank, are definitely challenged by falling inflation rates compared to Asian central banks. HSBC analyst reports that the ECB is evenly split on sovereign QE. Now remember that this Thursday will be the first Thursday of the month, which means that we will have an ECB announcement and conference. So pay attention to that. The announcements at 6:45 Central on Thursday, and then the conference is going to take place as usual with ECB's Draghi at 7:30 Central. Definitely be tuning into that. The Reserve Bank of Australia left rates unchanged at 2.5% as expected. It reiterates most prudent courses for a period of rate stability. India's Reserve Bank left key rates unchanged as well as expected. Recent data suggests that reforms in Spain are having a positive effect. Net unemployment falls for first time in 4 months, negative 14.7 thousand versus plus 20,000. On unemployment. And then the UK November construction PMI missed 59.4 versus 61.0. This is the 19th month of expansion, but the lowest reading since October 2013. The Russian economic minister ministry cut its 2015 GDP outlook from plus 1.2 to negative 0.8. Imagine that, GDP being cut by 2%. If you have not seen a chart of the Russian ruble versus the crude oil recently, it is something to behold. Lots and lots of damage from both the sanctions and pseudo sanctions as provided by OPEC by not cutting supplies. So Russia is definitely being punished right now, it appears. S&P's fair value is negative 1.0. The cash is trading exactly 1 point above the futures. And then looking ahead at the economic releases at 8:45 Central, 15 minutes after the open, we have U.S. November ISM New York, 55 expected, 54.8 was prior. At 9 o'clock, October construction spending expected at plus 0.6%, the prior negative 0.4, quite a swing there. At 10:30, we have the Treasury selling 4-week bills. At 11 o'clock Central, we have EU's Bernard, or the Fed's Bernard, it says. And then this evening at 7:30 Central, Australia's Q3 GDP Q on Q expected at 0.7%, the prior 0.5%. And then finally tonight at 7:45 Central, 8:45 Eastern, China's November HSBC Services PMI expected to come out. We might see a little nudge in our market from that. It's services, not manufacturing. Let's look at yesterday's action. Those of you who attended yesterday's Trader Bite, I'm going to summarize what was expected. We were expected to open in out of range, out of value, and the expectation was for an early test higher responsive buying, but the primary trade was for a drop to 2052. So we opened right here at 58.50. Was it 58? Yeah, 58.50. Responsive buying, if you recall from yesterday's Trader Bite, was looking for 2060, 2061. pushes to 2060 on the dot, drops to 57.25, tries again to 59, and then immediately drops past the 52 target below, down to 49.25. And this was looked like it was precipitated by by techs. Apple had what looked like a small flash crash yesterday in its stock, and there was a very jarring drop that happened. And because it was not the market couldn't substantiate what the purpose of that was, it looks like it took most of that back. So very strong whipsaw here. On this drop, the expectation was for a pullback to about 52 again for a lower low on this impulsive move, or a pullback to the 50% line, which is this blue line that you see here. Very watchful, this blue line. And here expected the rotation to continue for a lower low, at least a test of the 49.25 by a tick. And instead it pushed to 51.75 and then popped very quickly back up to the opening print by 2 ticks to 59. Very odd behavior here. Intermediate time frame was active yesterday pretty much throughout the session. Very whipsawy session. And then you could see here, once we popped back up to the open, sellers came right back in and took it down and then completed this initial move later in the day. Again, tough trade, to be honest with you. It's just, it seemed like a higher time frame was active yesterday and was taking prices to extremes on both ends. Again, it's a retest of the mid dropped here with the lower low, retest of the mid, nice rotation down. Got about 4 points there available, and then failed to make a lower low, and then we went right back up to the open again and sold off again in the afternoon at about 1:30, and then from there just whipsawing around. Very like I said, it's a very it was definitely not an easy read yesterday. More so in the NASDAQ. The NASDAQ had a very wide initial balance, well beyond the second sigma of what we consider to be normal of the data set. The NASDAQ did not breach the initial balance low or high because of this massive move down that happened in the morning. Again, we saw a little flash crash on Apple, and the probability, the historic probability, again, past performance not indicative of future results, the probability that we would have an IB high or an IB low that is not tested or breached throughout the session is very, very low in this product as well, just as it is in the ES, in the 2 to 3% range over 1,400 days. And here we have it. Yesterday we had that 2 to 3% probability playing out, that we would stay inside of the first hour's high and low. Again, very unusual behavior. On the close, though, the market closed well below the point of control, well below the mid, on a fairly balanced day. On the close, check this out. I mean, it really saw some sellers come in here on the close. You could see that we went from negative 30,000 on the delta, negative 30,000 contracts since the open, and we finished almost at negative 60,000. There was a lot of selling on the close here. Looks like a pretty decent hedge being put on in the futures, probably against some other position, because price didn't really follow that well, but we could see that the seller was very active on the close. Overall, we did have a trade that was very typical of what we see in an auction in between two balance points. So if we look back, we see here that the 18th, November 18th through the 20th, we made new highs on the 18th at 2054, rotated down to 2037.75, and basically put in a balanced day inside of the prior day. The next day opened, tested below that the 2-day low, found buyers, shot straight up to around the 2052 area. Remember, that was our initial target yesterday, and then it stayed there. The Friday, the 21st, that was 2 Fridays ago, we gapped up to new highs at 72 and 25, and then we sold off, but left a gap behind between the 52.50 and 54.75. We left a small gap behind. It's marked in green here. And then since then, we had Thanksgiving week where the market balanced up top with 2067 being the key balance price up here I mentioned yesterday. But essentially what we had is balance up here, very clear consolidation balance up here, very clear consolidation balance down here. If I incorporate those two balance zones, I get this profile. Let me highlight it a little bit better. Let's make it shaded. So you can see here that the upper balance, very clear, with a cutoff at about 2055.75. And then we have a lower balance that was built between the 18th and the 20th. And essentially what we did yesterday is we opened right in the middle of the, right in between those two balance areas and traded on both sides. So essentially what we've done is we filled in. So we look at this profile here with this thin area in the middle. Once I expand this out, here, you could see how we're starting to fill this in, fill this area in. So again, this is what it looked like before yesterday. See, this this volume here is missing, and then how we filled it in after yesterday. So we still have a fair amount of work to do, it looks like, to 2064 from 2054 or so. And in the overnight session basically held the entire range. 49.50 is the low, 49 quarter was our initial low, 48 quarter was the lower low that we put in later in the morning. 49.50 to 59 was the overnight session. So we're stuck right in the middle with a very balanced profile. So what we had accomplished yesterday is to start to trade this low volume area, this area that was left behind somewhat unchecked. We filled in the gap, so we did a good job of doing that, and we were stuck here in the middle, filling in this area in between these two profiles. So that's essentially what we accomplished. Looking at the overnight session, a small drift up on the Asian session, not much there, and then a quick pop on the Spanish unemployment news, and then the market just drifted down afterwards and is stuck sideways. The overall profile is Gaussian or balanced, nice bell shape with a clearly defined value area. The volume overall for the night session is steady. Yesterday's was 244,000. Today's is 191,000 with 15 minutes left, so it'll be around 200,000, which is slightly higher than what we've had in the recent sessions. But there's not much to glean from this profile. It tapers normally, slightly weaker high than low in my opinion, but it tapers normally on both ends with the bulk of trading happening in the middle. So the market's firmly accepting this 2055 area. Yesterday, 2052 was the point of control. Overall, we had a lower high, lower low, lower point of control, lower value. Today is a coin toss. To be honest with you, is a coin toss as to whether we start to pop higher or we break lower. As it stands right now, it looks like we're below the overnight point of control, and it looks like we're likely to attack this 2049.50 early. I want to caution you, I'm going to zoom in a bit here on the Thursday before we popped up on the gap. This day here saw some pretty aggressive buying on the open, and then it looked like the higher time frame player got their buying done and then released the market for day traders to chop it around all day. The cutoff point here is 2047.50, and I'm going to caution you that below there it looks fairly thin. So if the market breaches 2047.50 today and we see aggressive sellers come in, I would not fade it. I would not try to buy below that price. It just has very little. The most recent auction, which is that Thursday, has very little in terms of what could hold it up. The fact that we're coming back down here leads me to believe that we're likely to test the entire flagpole that we created on the way up. So better seen here in market profile. In the market profile chart, you can see that there's a small single here at 2047.25, and then it's very thin. You see those single prints all the way down. And so what this is telling us is it's likely that once it breaks that 2047.25 area, that it could easily zip down this flagpole. So if you're looking to get long in that area, just doesn't mean that it wouldn't work. Just the point is to use caution if you intend to get long. Overall, what are we expecting for today? What's the primary hypothesis? Clearly opening in range, in value, expecting a choppy open, minor number at 15 minutes into the open, not expecting much there. Construction spending 30 minutes after the open could give us a little jiggle. But overall, the market, I think, is likely to be in a standoff, waiting for which side will flinch first. Remember, the higher time frame or the higher trend is up. Is bullish. The market's simply pulling back. To advertise lower prices to attract buyers, probably. I think even if we break lower, I don't anticipate it to be a strong break. I think mostly chop today. I would caution you to be careful trading breakouts. The market's really watching crude oil and gold right now. And there's some concerns about what the ECB is going to do this Thursday and so on. There's some dissension, so to speak, within the governors in the ECB. So a little bit of uncertainty there, but overall I expect it to be a lazy, choppy open, and then I'd be happy to take whatever direction the market breaks into once it resolves itself. So be careful today. Be patient. I know some people got little flipped around yesterday because of the whipsaw action that we saw, and that's just part of, it's part of the recipe here that comes with trading. So on the open, I'm looking for tests on both ends, looking to see what quality test we get at 2056, 2055.75. I want to see what that looks like if sellers step right in and take it right back aggressively, or if it lingers there. If it lingers there and starts to move up and through 58.50, then look for new highs targeting 60.75, 61.75, and then we are back into testing that 2064 and 2067 area. And then if not, if we do get sellers early on as it tries to get out of value, if we get sellers and it starts to push lower, then again, caution at 47.25, and then I'm looking for it to zip down and start to test the low here, 36.50 and 36 following that. That would be the target downstairs. I'll leave you with those thoughts, and hopefully, again, I went over the purpose yesterday of what these trader bites are for. I went over the purpose of what volume profiling's for. I welcome you to check out that video from yesterday, because I went over how I'm using this information. I'm not giving you setups here, because the goal here is to identify a bias in a context and then trade it however you wish, with whatever setup you wish. As long as you have a strong bias, you have a strong, in my opinion, you have a strong handle on the next trade, and you're confident to sit through and let trades work all the way through. So doing this every morning is my goal is to instill a habit of following the same process and coming to the same conclusions, or come to different conclusions the same way every day, which is a cornerstone to professional trading. You just have to approach things very systematically and very methodically, as you see here. Good luck today, and I'll catch you soon. Take care.